So you would have seen I did publish a note yesterday on Senex coming out of that blackout period following the raising and placement they did 2 weeks ago yesterday. And so we have increased our price target to 48 cents. There's a number of changes that we've made to the model, really essentially building a completely new model for Senex following the deal, because to me it is transformational. It does actually bring forward the Surat into what is now a development phase. So they've called the accelerated program that they're bringing forward an appraisal program, but really these will be exactly the same as production wells and really immediately adding to cash flow once they start to come on. So the company have indicated that haven't yet sanctioned it, but they're probably aiming at doing a 30-well program to kick off probably around May or June. We wait for more update on that, but that'll cost them about $45 million. And really start to see production come on by December-ish or January. But yeah, that'll cost them $45 million, of which after the placement they'll have about $140 million in cash, and then the SPP will add another $20 or $40 million as well. So they're flush with cash, zero debt, and that's something I really like. So it may not be the best part of the acreage in the CSG fields in the Surat, but it certainly has proven to be productive with all the historical data they've got. And if you're starting with a low capex base, given the costs out the industry have been through and all the changes that APLNG and GeoNG have been through, that they're all the learnings from industry that Senex can apply on day one. It's become just standard practice. So they come in as a low-cost producer with zero debt, can start to incrementally chip away at development and really speed up or down depending on what results they get, because they're not having to service huge amounts of debt, which puts you on a treadmill where you can't get off once it's started. So a good strategic position, good transformational asset. We've moved our methodology on valuing the Surat to a DCF, but we do note that given this early stage of development with such low available data points, it is very hard to pinpoint the variables that go into that DCF. So we've only counted 25% of our DCF value towards our total 48 cent valuation for Senex. So, so to me, 48 cents, it's not hard at all to get to that price target, even though it looks quite aggressive. We are at the top end of consensus, where I think there's one other broker at the same valuation in the market, but more than happy to buy at these levels. I just think that with the oil price cycle the way it is, the gas market obviously heating up as well, and the fact it's got no debt, I like Senex and think that the share price re-rating it's already had does make the SPP look very attractive, which is obviously ongoing now. So we really do, it's essentially a relaunch of coverage with the new model that we've got, and a 48 cent price target with an ad recommendation.